morning, everybody. Welcome to our Thursday discussion. As always, we start off with a disclaimer to say that we're not trying to give financial advice, so we're not acting in a fiduciary capacity. We're trying to provide accurate, timely information, but we can't guarantee it, although we try to be as complete as possible. Welcome to our Thursday session. We're going to continue talking about Naspers and Prosus. Last week, we spoke about the results that were released, and today Matt's going to take us through how the structure will change and whether that structure will provide benefit to shareholders, and of course, what kind of influence we can expect on price movement based on the structural change that's proposed. And then I'm going to have a quick technical update on the stock, and then we're going to carry on talking about derivatives. So, Matt, if you're ready to take it away on the structural change between Prosus and Naspers, thank you very much for highlighting some insights for us.
Thanks, Simon. Okay, good morning, everyone. So last week we spoke about the results. I've got the slides here. I'll just jump through them quickly to get to the holding structure, since that's what we'll focus on today. But just some background of it. So this slide has got the history of the holding structure. So just to remind people who are not familiar with the history, so we go back to September 2019, pre-September 2019, where Naspers existed by itself, and at that stage Naspers held about 31% of Tencent, and then in addition to Tencent they have the e-commerce portfolio and other non-core assets. Since Tencent's the core asset, I always refer to everything else as the non-core assets. So back then it was just Naspers listed on the JSE. We then had, in September 2019, they decided they would unbundle all their international assets into a foreign company called Prosus. So Prosus would then hold Tencent and the international e-commerce assets, and then Naspers would own the SA non-core assets. That includes Takealot and Media24, and they would hold 73% of Prosus, with Prosus holding about 31% of Tencent. And they did this mostly to reduce the weight of Naspers on the JSE, and then also increase liquidity and foreign investment through the listing with Prosus. And then what happened in August 2021 was Prosus then issued new shares, and they used those shares to purchase Naspers. So this resulted in a cross-holding where Naspers owned Prosus and Prosus owned Naspers. It sounds quite confusing because it is, but essentially there was a cross-holding agreement which ensured that the economic rights flowing from Prosus, there was an agreement on the percentage that would flow to Naspers and to the Prosus free float shareholders. So that's what happened in August 2021. This is the current structure, which I last updated on the 27th of July. But this was to get here. I mean, they also, after they announced the, if I go back to the slide, after they announced the structure from August 2021, they then introduced share repurchases, which complicated it further because it impacted the free float number of shares and the net shares in issue, which then impacts the price on a per share basis. and that was changing weekly with the weekly repurchases. And then there's also some complications with the amounts that can be bought back and through which entity these shares could be bought back, and whether or not they were cancelled or not. Normally when companies repurchase their own shares, they cancel them, so it reduces the number of shares outstanding, or they use them in stock-based compensation. But in this case, Naspers couldn't cancel the shares outstanding because Prosus owns just under 50% of Naspers. And if they cancelled the shares outstanding, then Prosus would end up owning more than 50% of Naspers. There's other complications as well with who's buying Prosus. So Naspers is also needs to sell Prosus shares to fund the repurchases of Naspers. Prosus is selling Tencent to fund the repurchases of Prosus. So it's quite a complicated structure, and I always discuss with my team. I say this is like a circular, an Excel function with a circular reference. So that it basically results in an error. When they introduced the discount, or since the listing of Prosus, the management's failed to reduce the discounts in these. It has closed a little bit over the last while, but this is one of the reasons why they think it's not closing. So the final structure, which is this one over here, this is the proposed structure, and it's basically the same as the middle one that I showed you in the historical structure, except that the percentages are different. And Naspers will own about 43% of Prosus, and Prosus public shareholders will own 57% of Prosus. This is in line with the current economic rights that flow to these shareholders. So as an ordinary shareholder, nothing should change in terms of economic value. And basically, how they're going to do it, and the most simple way to describe what they're going to do is this. So Naspers owns, if we go back to the current structure, you can see Naspers owns 56% of Prosus. And Prosus owns just under 50% of Naspers. So what will happen is Prosus will issue enough shares that results in Naspers owning 43% of Prosus, and this will be achieved by issuing these shares to the Prosus public shareholders and not to Prosus. But because Prosus owns 49% of Naspers, Naspers will also issue shares to public shareholders, and that will dilute Prosus's ownership down to Prosus's ownership of Naspers down to a minimal level. Management has not disclosed what that level will be. So in our report that we released on Monday, we've got the estimated number of shares to be issued. For Prosus, it's going to be about 790 to 800 million, there or thereabouts, new shares issued, which Naspers won't take up. And then we don't know how much shares Naspers will issue, but it's going to be in the trillions. What will then happen is Naspers will then do a share consolidation or consolidation of shares, where there'll be a share consolidation is basically when they give you maybe one share for every 100 that you own. In this case, it might be one share for every 1,000 or every 2,000 shares that you own. Obviously, as a Naspers and Prosus shareholder, your number of shares is going to change, but the economic value won't. So for ordinary shareholders, there's nothing, there's no action required. It shouldn't really affect anything. It's quite a clean way that management has decided to simplify the structure, and the simplification has resulted in that's partly why the shares increased 9% and 6% last week when they announced this. And it should, because it reduces the complexity, it should reduce that discount to net asset value. That's it from our side. I'll just jump to this technical chart quickly before we do some Q&A.
Perfect. Thanks, Matt. Okay, so last week, Sean highlighted that Naspers was trading above the 200-day moving average, which is the blue line you're looking at. The 21-day moving average is also above the 50-day moving average, as Sean highlighted, and we said that there was resistance levels just above 3,400 Rand and supports just below 3,000 Rand, as I've indicated here. What's interesting to me is that the 200-day moving average is approaching the support line. And if we are correct in assuming that the results of Naspers weren't that great, that the share price was overcooked by the jump that resulted from the announcement of the structural change, then we could very well see Naspers come back to the support levels around the 3,000 level, and that would coincide with the 200-day moving average. So I think if it does get back down there, it will probably present a nice opportunity to nibble on the Naspers shares. So that's that from a technical point of view. So keep an eye out for the 3,000 level. It's not that far away. It's 3,238 when I did this chart. Yeah, I think let's open up the floor for questions. Matt, it still seems fairly complicated with all the shares that are being issued in that, but like you said, the economic interest stays the same. So if 10 cents makes money, Prosus will make money, and Naspers through their 43% will get the benefit. And that's that. The other benefit is, of course, that Naspers can then use profits to repurchase shares, reduce the number of free float shares in circulation, and unlock value for the shareholders like that. And that'll probably reduce the holdco discount even further. All right, guys, you're welcome to put your hand up, switch on your mic, ask the question live, or type the question for us in the chat. We'll be looking out for that. And we'll do Q&A, and then I'll use the last 10 minutes to carry on with our little discussion on the using of derivatives. So I'll keep an eye on the chat here, Matt. Let's see. Oh, shucks, Nolan. Sorry, you couldn't see the slides. Are you seeing it now? I see Richard says last week's session is not on the YouTube channel. It's not yet, Richard. It will be up in the next day or so. So I'll keep an eye out for that. Yes, Tim, please fire away.
Matt, hello. Thanks very much for doing this. It's very interesting. Can I ask, Matt, what is the discount now? And do you think there are any other factors that are keeping the discount extant? I mean, maybe the one way to think about it is, what do you think would happen if they just unbundled the 10-cent share? Why is that not an option, that is on the table? It just, we've obviously asked Naspers these questions, and they have a lot of answers, but I'd be interested in your perspective.
Okay, thanks, Tim, for the questions. If I don't, just remind me if I don't touch on all of them. So firstly, why is the discount so so big. The first reason is when you've got a holding company, most holding companies will trade at a discount to their NAV, and that's just because often the management of the holding company often doesn't have full control over the companies that it owns. They also don't have the expertise to run those companies, and their time is spread quite thinly, or their attention is spread quite thinly over the different companies that they hold. So that's the reason why there's generally a holding company discount on holding companies. For Naspers and Prosus, an additional reason why there's the discount is because Naspers owns, because of this complicated holding structure, you've essentially got a double discount because Naspers is a holding company holding a holding company. So that's another reason. And then also, there's also some risks which some of the viewers might not be aware of, but the Naspers and Prosus have each got unlisted different shares which have got different voting rights. So collectively, ordinary shareholders of Naspers and Prosus don't have control over Naspers and Prosus like ordinary shareholders of most listed companies have, because the controlling shares or the shares that have got higher voting rights are held by, they're non-listed and they're held by mostly insiders. So there's no shareholder control, and then also there's the risk of the VIE risk, which is the risk in on the Tencent level, where the company that Prosus actually owns is listed in the I think it's the Cayman Islands, and they don't actually have full control over Tencent itself, because the Chinese government prohibits foreign ownership of strategically controlled assets. The Tencent is actually owned by a couple of the founders in China, and the economic rights to that are between the founders, and the entity listed in the Cayman Islands are contracted by an agreement. And China's never officially they've never like outlawed that structure or approved it. So there's a risk, and we have written about it before. There is a risk that China cancels the VIE structure. It's a big risk for Naspers shareholders and Prosus shareholders. So that's to do with the discounts to net asset value. Why wouldn't they unbundle Tencent? Is because Tencent is the asset that finances literally everything else. So all the other assets, the e-commerce portfolio at the moment, the majority of those are loss-making, and they're funded by the profits of Tencent. I hope I got to all your questions.
Yeah, just quickly, what is the discount at the moment?
Yeah, so the discount is I've got it on for Naspers it's about 35, and for Prosus it's just under 30. Yeah. Yeah, we do in our report, we do have the we do have the graph there, the historical discount to net asset value. Can also I'll also just pop it in the chat here as well.
Okay, thanks, Matt. Does that answer all your questions, Tim?
Yeah, no, thanks very much. I mean, it's just a thumping discount. I mean, it is just,
no, it is big.
Given everything that Matt has said, you know, which obviously does explain that it would be more than a normal, you know, holding company NAV discount. So this seems to be this still a problem there somewhere.
Okay. Thanks for that question, Tim. I see Marius says he hasn't looked at the SENS announcement because he was out of town. Lucky fish. How will the issue affect small shareholders, i.e. those with less than 100? So Matt, I suppose we'll know once we know how many shares were issued by Naspers, and then they may or may not make an offer to minorities to tidy things up, but we just don't know at this stage, eh?
Yeah, so the consolidation is only going to happen after the issuance of shares. So for owners who currently have got less than 100 shares, that's likely for Naspers, it's likely to increase. Yeah, I can't give you the number. Management themselves haven't given the number. But it's likely that Naspers is going to issue over 1 trillion shares. So ordinary shareholders, number of shares will increase, but the value of your shares will stay exactly the same. And only after those shares the number of shares have increased, then they'll do a consolidation. Also, don't know what the number is. You know, if I was setting the consolidation number, I would try consolidate it back to a number that that is very similar to what shareholders have got currently. So there's very little impact.
So to consolidate the numbers of shares back to having a value of Naspers price around $3,200. That's what you're saying?
Yeah.
Okay. All right. I hope that answers Marius. Any further questions, guys? Tim, I see your hand still up.
And let me just
Martin
add
says,
that, sorry,
previous
let me just
yeah, Matt.
Sorry, let me just add that this is still to be voted on by in August at the AGM, but it's likely to go through because of what I mentioned earlier, that the voting control sits in it's the control of Naspers and Prosus does not sit directly with the ordinary shareholders. The majority of it is controlled by some other South African companies not listed.
Okay. Thanks, Matt. Martin says previous corporate action when Prosus was created triggered some interesting tax payments for investors. Anything here that will do something similar that we should be checking out? I doubt it if they're going to just do issuance of share and resulting in a consolidation which will result in the same value for the shareholder. I doubt whether it'll trigger a capital gain. Am I right, Matt? You can just confirm.
Yeah, so we don't have any clarity on that, and also we aren't tax experts, but this is unlikely to result in any tax implications.
Okay.
But there's they should still give clarity on that. Yeah.
And it's Karina has answered her own question, I think, by saying it's the event's a share issue, it won't be a rights offer.
That's great.
I hope that answers Karina. Any further questions? Martin says thanks. I don't see any further questions, and I don't know whether we should try and spend 5 minutes on the derivatives. Maybe just a recap of what we did last week, and maybe just take it one step further.
Very sorry, I've just lost your sound.
Yeah, same also.
Sarel, I think we've lost your sound.
Apologies, I seem to have lost.
We've got you back.
Yeah, I think my headset died on me. That's why I was talking away and nothing was happening. Tom said I was muted, but I had to change to the computer speakers. I said, Matt, can you bring up that derivative presentation of mine quickly, and I'll see. Okay, to go to the next slide. So last week we spoke to, it's a derived instrument. It covers both parties looking for a price movement. The one we used the example where the farmer sells his wheat to a miller who gets guaranteed input costs, and the farmer gets a guaranteed sales price. And we said we used a margin or a good faith deposit as collateral to make sure that both parties perform to the contract. If you'll jump to the next slide, Matt. We said that it could be used for hedging, which was exactly that, speaking about the farmer hedging his crop against adverse price movements and the miller hedging himself against the same thing, to the flip side, where he would have to mill and not make the same amount of profit. So, no, go back to the previous one, please, Matt. So I'm going to touch quickly on speculative stuff. So you as a trader can use derivatives to load your exposure. Instead of paying 3,400 Rand for a Naspers share, you can pay a fraction of that. Typically, the margin's around 15 to 17.5%. To get full exposure. So you can buy more stock, but you don't need the full capital to exploit short-term price movements and, of course, the volatility. You can also speculate that the price is going to drop to below 3,000 Rand, like we said, when it was just over 3,300 yesterday, which would then give you 300 Rand profit, selling it at 3,300 and buying it back at 3,000. So you could use the speculative opportunity, but you need to understand the risk, because it feels like it's play money, but the gearing effect is real. Think about it. If you have you buy a share and you get 100% exposure, and you only put down, let's speak hypothetically, you use 10% as margin. So you put down 10 Rand as collateral, and that share price moves by 10 Rand. It means you've lost 100% of your capital. So the gearing effect will catch you, and you have to be mindful of that. We used the example, and I said I would elaborate on it by using the margin as a constant on your account, and using the cash price movement daily to adjust the cash in your account and give you the account value. But we've run out of time, and I'll carry on giving you a practical example of how a share price moves and how that impacts your derivatives trade next week. I think for now we've covered things, and we have to close because it's almost 12. Well, it's 12 o'clock. I thank you for your attendance. I thank you for your questions, and we look forward to seeing you guys next week. Thank you very much, Matt, for your insight. We do appreciate it.
Thanks, everyone.
Thanks all.
Cheers.
Thanks. Have a good day. Cheers. Bye-bye.